So my name is Akinwande Ademosu. I pioneered the business. I started the business as the pioneer managing director. Creditor is a consumer lending company. We've been existing for about 15, 16 years. We actually created an industry that we know today to be the consumer lending industry, or unsecured consumer lending industry. Is been into different things, but that's what we are, that's what we do. We lend to people that are less able to afford commercial bank loan, the underserved, the unbanked, the underbanked, people who have been deprived of the full suite of commercial bank services. So we're like the bridge for them. My thought about this would be in using a bit of technology term. So the Nigeria financial system exists within what we can call the Nigeria operating system. We're all familiar with operating system of our phone. We have the iOS, we have the Android. So when you look at it, there is an ecosystem that controls the entire environment where Nigeria financial system exists. So naturally, Nigeria financial system will reflect the overall body in the ecosystem, because if the ecosystem is not well set up, there's going to be a problem with the with the subset of the entire structure. So as a country, we have some positives, and then we also have some fundamental negatives. So the financial system itself is that environment where everything that has to do with our interaction with finance, interaction with trade, interaction with exchanges, interaction with ourselves, anything that has to do with business. That is the environment where that can happen. And in that environment, there are two ways to just measure or weigh how that environment works. One of it is what you call the efficiency of the system. The other one is what you call the depth of the system, for you to measure whether what you're doing really is working. And when you think about it, with respect to efficiency, we know we have few things to deal with, because efficiency, you're talking about the spread, interest rates, the way interest rates is managed. You're talking about bank concentration. The other thing is that you're also talking about the way the overhead of managing the system actually is calculated. And when it comes to debt, exactly, when it comes to debt, you want to look at how funding is dispensed to the economy. So when you look at all these levers, you see that there are a few things that we need to deal with. Not super healthy, but the prospect is there. Unfortunately, we have to deal with pandemic that has thrown things a bit, off the cuff for us. So we're not too bad, but we're not really, in the right place. I'll start that from the, what I would call the foundational, idea or ideology that birthed the business. So as a group, we did analysis and we saw a wide gap between what the so-called served and the unserved. And we realized that the focus of the financial system has been to the top layer of the middle class, and then the people you call the HNIs. And then we left the bigger bucket or the portion of the economy, which is more like the bottom of the pyramid, out of service. And when we say out of service, it's not like we're not taking money from them. We still take money from them. We still allow them to put deposit in the bank. But when they come for service, we deny them those needed service, because everybody needs to leverage at some point. There's just a little you can do with your funding. Your fund can help you to start your business, but you need to now prove, after proving your concept, to grow your business, to sustain the business, to even invest in innovation and test other plans, you need funding. But this was lacking. That was what we saw, the gap we saw, about 16 years ago, that we decided as an organization we want to fill. That was when I came in. So it was more about, okay, there's a purpose to be fulfilled and there's a need in this market. So we did not create products. We wanted a solution to a major problem that our economy was facing at that time, and we provided that solution. So as a business, you ask the question, what is our uniqueness? Our uniqueness, one, is that we're purpose-driven. The second thing is that we have people who believe and share the same vision with us. The other thing is that we have a very robust technology. And then the first mover advantage for us is a major thing, because when we came to the market and saw the scale of the market, we by ourselves invited other people to join us. And the reason for that is that, this is not about us. This is about the nation that needs help. And if you can be the catalyst of that transformation, we're willing to do it, even at the expense of bringing others to come and compete with us, because at the end of it, competition drives benefits to the beneficiaries. So if you have a purpose that makes you to want to serve the people, it means therefore that you should make yourself to be competitive so that more benefit will go to the beneficiary, because you don't want to be, the sole player, and that becomes, monopoly. So you monopolize markets and you manipulate the customers. We don't want to be that. We don't want to be too big to control, because we know it's benefit to the customer that result to benefit to our company. So one of the things that we say generally here, and that's why our mission statement says, enabling people's peace of mind. All the people, all the stakeholders, what we stand for is to ensure that there's peace of mind. So I think purpose is our major anchor, because it comes before profit for us. Okay, so in banking system, so we have in Nigeria, I think we have two bodies. We call one, deposit money bank. Those are the ones that we call the commercial banks and all the banks. And then you have non-bank financial institutions. Within that space, within the non-bank financial institutions, you still have a lot of, other buckets. You have the finance houses, you have the microfinance bank, you have the Fintech, you have, we have quite a few and a number of operators within that place. Within the deposit money banks as well, you still have, a few other ones. You have the commercial bank, you have the merchant bank, investment bank, you have, mortgage banks. So you have all this within that system. So what do we do, to be able to respond to the way the system was created? The Fintech itself, the name Fintech, is financial technology. Everybody's doing it. So if you talk about the alternative, lenders or alternative operators who are non-bank, because now the classification is like, it's either you're this or you're this. But everybody, ATM is Fintech, it's financial technology. So nobody should get confused about what this thing is. But the application of that system and your ability to being able to upgrade what you offer is what differentiates you in the market. And the fact that we have one set of people that are called money bank and the other ones that are called non-bank makes us to have a competitive edge. One, speed. We are nimble, we are quick, we can make quick decisions. And two, we have no hidden. Most of us, like Creditor, one of our foundational ideology is that you don't hide to charge the customer. So there are no hidden charges. It's more open and it's less, it's less exploitative. You don't take money from people and say, I can't lend to you. There's so many banks in Nigeria, especially the foreign banks. They take money from Nigeria and then Nigerians rarely borrow from them. That to me is aberration. It's a non-brainer. Naturally, people should not just denounce, they should have a runoff on those institutions, because how come you can say my fund is good for you to hold for me, to use, and then I'm not good for you to serve? So these are parts of the adjustment that the system itself must come to apply. So if I look at your book, I should be able to say, okay, these are the ways your book is made up, and say to you that, see, for this community of people that you're taking deposit from, what do you do for them? What kind of service do you render them? But we don't measure on those bases. So the advantages are there because we are in that market. We have no choice because we came for them. Our solution is tailored for them. So we address their needs and we solve their problem. So those are some of the things that we look at. Technology-wise, we're better because we are always upgrading what we have. You know, the speed, you know, and we're close to them. We're with them. They're part of us. You know, because really when you even look at the way the system is structured, these are the people that are operating their businesses. So we're not HNIs like that. We're part of the community that we're serving. A bit of fundamental or foundational, structure, because everything works in structure. The first thing is that when you're a non-bank financial institution, you choose your markets. We chose consumer and retail markets, where we learned to SMEs and low-income earners to be able to bridge finance whatever they want to do. So you want to pay your rent, you want to pay bills, hospital bills, you want to finance, completion of your house, you want to fund your vehicles for business, commercial vehicles. You have a shortfall in your salary. You need money before your payday is due. That position is wide and large. So we fill that gap. So to circle back to what you say, there are few organizations, there are some institutions that are set up to be able to do that. So you have the investment banks, you have the commercial banks. What is saddening though is that we don't make the right call on the people that should. That this is as a nation, on people that should, because if a commercial bank boasts of so many billions of profits, people should ask, doing what? You should be asked questions. So one thing is that government naturally, so one of the principles that guide, or theories, model that guide, gaps, especially at those low level, is what they call the credit rationing, theory. So you could be rationed against, in which case we look at you and say that, okay, we have profiled you based on the cost of serving you and also based on information asymmetry, and we decided that you are not a good market to deal with. So the financial system now rationed you, and if you're 10, they give to 1 and they give to 2. That's why the intervention of government always coming to say, guys, these guys have been neglected, but in the real sense, they're actually the engine of growth, because there's no nation that I've seen that has grown without really developing the SMEs and the middle class, because that is where the base is. There's nothing you can do at the top that will make the base to be good. You need to deal with the base. So in most cases, when government see those gaps, they come in to say, we need to manage. But the challenge they face, however, in making those decisions, especially in taking the control, is that how do we trust people who are just not trustworthy? If you couldn't do it with your little resources, how do we trust you're going to be able to do it? So they try to manage, and that's why they create entities to say, okay, you company name this way that is known for government, do this on behalf of government. And then when the information is not open, there's no information, there's information asymmetry, that people can't trust the information that is coming out. People start to abuse the system. One, the system is not inclusive. The system is not also integrated. So inclusion, integration, and also the trust in the system and simplification of the process of being able to do this is why they have to be the ones to take control and run it. And at the same time, only few organizations you can actually trust in a nation like ours. We have alternative lenders. People don't really appreciate what it means to suffer for things or to struggle to get things, that come easy in this environment. So if government distribute funds, even to our organizations like ours, there's a likelihood that people will abuse it. So what the government has not done right, however, is to create a system that itself is self-evaluating, or should be. So we have taken the easy way out to say, if you can't trust one, you can't trust all, which is a very bad way to run a system, because there are still very trusted people within the environment, within the system that can dispense this thing. And what government has done, they didn't come out to say, we're not going to give you guys funds to do what you are saying, what you asked. They put conditions that are just not bearable. And I'll give you an instance, when you're a finance company, government will ask you, if you want to access the fund that we have made provision for you to be able to give to SMEs and to fund other people, what you will have to do is that you come with treasury bills in the same amount, and you make that treasury bill deposit, and then we can give you a fund. My question is this: I'm not a deposit-taking company, so I buy all the fund that I use. So buying fund meaning, therefore, I borrow from the community, from the open market. So if I borrow from open market, they expect me to use their fund. How do I give that fund to you? Because the cost of the fund to me is far higher than what you see in commercial banks. So I can't be put on the same condition that you put. So commercial banks now, being the ones with huge treasury bills deposits, they're the ones taking the funds that we should have been using to serve. We've made some presentation to central bank to say, guys, you have to be able to evaluate who should get it. If you want to reach the people, you want to have financial inclusion, the best channel is the people that have come purposefully to include other people in the system. You cannot give these funds, or you shouldn't give these funds to people who would not use their funds to do it. We get funds and we use it for the market. So it's been back and forth. I know that the current, the current people that are running the system now, there are few new people that are trying to change the way the system is structured to make it more favorable. But overall, as it is currently, it's still going to remain very difficult for alternative lenders to be able to get access to the funds that government is providing, to reach the people they want to reach. Government is doing the little they can, but it's not just an open system, and it's still not fair. Okay, good question. Not just legal framework. There's need for, some level of regulation. In everything. You can regulate how people take water. So there's need for regulation in everything that we do. Including the fintech environment. Like I said, fintech is not a name of a person. Is an operational enabler. It's an enabler. So everybody is doing it, in a way, in some ways, some form, So it's not exclusive to people, But the application and usage of these different, fintech, handles, it differs. So I think government must find a way to, not only regulate, but also to develop capacity to understand. Because where you will see a lot of pushback is that, government is trying to do what they possibly don't really understand. First is to build capacity, gain understanding, develop trust, engage the stakeholders, and then together, because stakeholders also want sustainability. Everyone wants things to be done in the right way. So that, to me, is the way. But if the question is, should there be some level of regulation? Absolutely yes. But the process leading to that has to be well thought through. And again, you can't stop. You have to be quick to do it because the market is evolving, and government also must start to evolve.